What's up, guys? This is a quick video about the opening range from this morning in New York session on 16th of April 2025. This was like the framework for today, actually. So I didn't take any trade on this day right here because if you look at the 4 hour right now, it's actually a pure mess, right? It's actually not good. It's actually not good. So it's terrible shit, literally side by side candle. But I wanted to show you still a quick setup on the 1 minute time frame that you could have engaged this morning. So right here you clearly see this is 7 a.m. So the 7 a.m. So basically you have 7 a.m. from here to 8 a.m. from here. This was the 7 a.m. hour. We got the 8 a.m., the 9 a.m. right here, which actually form these smooth hedges right here that you have, right? So you learn from ICT, these are the smooth hedge you're kind of like observing or wanting to go run and run for these type of edge right here. The most important thing right here is basically this opening range from 9:30 to 10 a.m. So basically 10 a.m. is right here. This is 10 a.m. This candle low right here. Prior to that, we have this low right here from London session, which also include this one. And this one is not included, but this one specifically, and this was the announcement this morning about China wants to negotiate with US, but it doesn't really matter, right? At 9:30, we got the sell side run engaging the sell side liquidity on the 9:30 Judas swing. And then prior to that, at 10:30, we basically retraced to a 50% of the opening range. So the opening range is forming in between 9:30 to 10 a.m., right? So basically, we're compiling the data for the opening range from 9:30 to 9:59, right? So we're basically not including the 10 a.m. candle. So we're excluding that candle. That was a sell side run right here. We took that low, specifically this raise right here. The change in the state of delivery happened on this candle right here when we break above that high right here. This is your order block that you have right here. We got a buy side rebalance to 50% of the opening range right here on my mouse cursor. A retracement again occur on that buy side run activation, this gap right here, including this high right here, going back for 50% of the opening range. At 50% of the opening range, we got a rebalance to this order block right here because this run was imbalanced, right? We got also this bullish fair value gap right here. And that should have it been included on this actually, but in this line I'll use like the smallest one, otherwise it's kind of like cluttering my screen. And then this is where the whole move started. So it started right here at 1020 and it started expanding, going back for the first presented fair value gap that it's right here. All of these things are plotted automatically on your chart, okay, based on specific requirements. This is your first target for a buy side run if you're in this trade. If you're in the buyer right here, we're going back for the smooth hedge right here, and that's pretty clear, right? You can clearly see that this run right here was extremely obvious. Relative equal high standing right here above the opening range, including this high from 1043 to 941. So we have these relative equal high that can be your target from a 50% level. Look at this midpoint of this opening range right here. You got this rejection right here in a buy side imbalance, sell side efficiencies. You got a breaker potentially in this area too. You got one tap right here, two tap right here, three tap, 4, 5, 6 tap right here. Bullish imbalance right here where the move started, engaging all the sell side possibly that you can take at this time. This sell side was happening inside the macro, so you have like the 1050, the 1110 macro right here. So I can annotate that actually. So 1050 right here, the 1110. We got this macro right here. So this little macro right here, sell side run activating sell side below that small low resistance. If we take this low and this low connected together, it gives small resistance. We got this low resistance standing right here, these relative equal high right here, and we got these smooth hedge as your target, and it exploded the buy side. Take that right here. This candle right here changed the state of delivery again above the opening range high. Didn't reach for 0.5 standard deviation, show me weaknesses. It's basically half deviation between 0.5 and the AM opening range high. So if you take a fib right here in between this 0.5 and this actual AM opening range high, you got 50% rejection. This is considered as premium. You got this premium erase right here standing. This order block right here from this bullish candle, you extend that in time, you can see we break below this, rebalance this sell side imbalance, buy side deficiencies, that's fair value gap. You see the body respect the fair value gap perfectly. We got another sell side imbalance right here. I didn't mark this one because it break through this low right here, but this can be also annotated on your chart. But I was working off this order block that is right here, okay? This one right here. This order block right here. We break through this. We go back above this. See the rejection of that order block. We don't need to use that fair value gap right here. This right here initially started to move above midnight open, above the AM opening range. And you also have the London opening range in this area right here. But still, it's not really a big deal. New York lunch macro from 11:30 to 12 o'clock. You can see right here 11:30 to 12 o'clock, right? That is the sell side distribution that we get right here. Your target on that sell side run was the relative equal low standing right here. Also the macro low right here. Rebalancing that buy side imbalance right here. You clearly see. Go back for midpoint. So if you take a trade on the external range of the AM opening range, you can aim for a quarter level, which is this level right here. You can aim back for the AM opening range, or you can go back for the midpoint, or you can go back for the lower quadrant as well. But these are discretionary decision, right? I cannot tell you like do this to do that. This is a mechanical function, and I don't want everybody to trade mechanical thing, right? So right here we got sell side imbalance again. We got an order block right here, but I will not consider this one because it's in discount relative to the actual opening range. But these are your low resistance right now, standing below the market AM opening range low. And there's also still a little bit of sell side right here that can be triggered. Specifically on these type of days right now, on the 4-hour time frame, you clearly see all of these barcode 4-hour candle printing side by side, massive consolidation overall, and we got another macro coming in here. So yeah, in relationship to the previous day opening range from the PM session, you have this one right here. And clearly you can see that the opening range from PM session is the same size as the standard deviation, and the PM opening range presented fair value gap is in the midpoint of it. And the fact that we stay inside these 0.5 standard deviation on a very small opening range show you weaknesses, and also show you that you can look for small setup, in other term, looking for low objective hanging fruits. So that being said, I hope you guys understand and enjoy these type of thing. That is this order block right here that responded pretty nicely. Like I said, I don't want to use it because it's very close on the sell side, but you can basically identify this right here. This one right here. You can use also this one right here, but this one is more reliable on that right here. Now we got this low right here. We got this low right here that it's also including both of them as a relative equal low. We got this one right here, and overall from this low to this low, we had a lot of low resistance, and I'd like to see price going back to this level right here. We got macro coming in like 3 minutes, but this is like a small presentation on how you can look at these things overall. And what's the indicator does for you? So if you want to claim that indicator, it's basically you're going on ohlc.group/framework. I'll put it bigger a little bit here. It's called this. So you type in ohlc.group/framework, and that's the first link on the top. You're getting this indicator here that has basically all of the function that you see right here on the screen. So it has the AM fair value gap, the AM first presented fair value gap that it's inside the opening range. You have the PM same thing right here. And if you don't like the first presented fair value gap, or the first presented fair value gap is disqualified, you can change it for the second one. So you can manually change it for the second one. If you don't like this one, you can go for the third one, right? Just always according to what you want, basically. But ideally using the first one, and make sure after for the next day you go back to one, otherwise the next day is going to plot the second one as well. Macro, you can turn off and turn on the macro. I did fix that problem that I have on the last videos. Show London opening range, you can show the midnight to midnight 30. It's actually showing right here. Very simple. There's no first presented fair value gap. It's only two lines. You have the midnight open too. So midnight open is important to actually buy below midnight open and short above midnight open, ideally if setup are corresponding to what you want. All of the standard deviation up to 6, so basically 0.5 is low volatility condition, 3.5 medium volatility condition, and 6.5 is considered as a high condition of volatility. You can change the size of the label. I keep it simple. There's no customization. The reason behind the customization is I want you guys to have a very specific framework that is consistent, right? So what I mean by that is, like, if you change the color to the black background, it's going to change automatically for the light color you can see right here. But that's the point. Like, the point of consistency basically is, if you try to change these things or these color all the time and all the time, that's a variable that can be changed. And since you don't really want to have some variable that change too much and rely on something that is more consistent overall in terms of plotting things and journaling and visual representation of something, I'd like to have something that is more consistent on the customization. So that's the reason why I denied the change, or denied the ability to customize the tool and changing the type of lines and changing the colors and everything. And sorry about people that really likes that ID. I just don't agree with that. Okay, so these are the things right here. This is very simple. You put that on TradingView, put that on your chart, and build a narrative around it. And hope you get like a pretty good setup, or hope you get like good trade with it. And other than that, I would say, even if you don't trade, like right now, I didn't trade anything, but these type of thing that I've plotted right here in my chart are actually in my journal. Okay, I'm journaling still these type of opening range situation or framework, to basically being able to see, over time, when you plot these things and you plot these things, you're basically training your mind, you're training your ability to see that type of setup in real time. Okay, so that is the goal. We don't predict, we don't anticipate, we're looking for these type of thing, and we engage with the market when it's time. So hope you guys enjoy. Consider liking the video, and if there's enough response, I'll be doing more of these in eventual. Okay, bye.